It is August 15th, and actually I'll just kick it over to Lynn. I don't think we have any updates.
All right, thanks, Katie. So we're talking about June 2019 production here in the month of August, and a very interesting month, to say the least. We're back to setting records in production. So we had a 2% increase roughly in oil production and about a 2% increase in natural gas production, both of them new all-time highs. Oil production jumped by 30,000 barrels a day to 1.425. So we're at 1.425 million barrels of oil a day. And like I said, associated gas, a record number of wells producing, and a very healthy, robust number of completions. We're running in the upper 90s and lower hundreds in terms of monthly completions. When we look at permitting activity, it has held up pretty well, and the rig count actually increased from July to today. So we're up to 61 rigs. So overall, pretty healthy in terms of the oil and gas industry. We took a look at the June oil price, and if you look at the wellhead price as calculated or as reported to the tax department, it came in a little over 5% above revenue forecast. And looking at estimating today's wellhead price based on North Dakota Light Sweet and WTI, we should be running about 6% above revenue forecast. So we're in good shape there, and the production is running about 3% above revenue forecast. So all on the plus side. That's the good news. Interesting news is that wells waiting on completion hardly changed at all, as did the inactive well count. And there are true jitters in the industry about oil prices. This week has been a real roller coaster with the ups and downs, and last week was as well, with the trade disagreement with China and the issues with Iran. There's just a lot of uncertainty about supply and demand all the way through the end of next year. When we look at Fort Berthold, the production went in the same direction. The well counts went in the same direction. They actually gained a drilling rig, up to 15 drilling rigs and up 18,000 barrels a day. So again, on the plus side. The bad news is when we get to the flaring numbers. We really fell out of bed in terms of flaring. We, as you know, our current goal is 88%. We dropped to 76% capture. And we saw the flaring volume increase by, I think, 165, was it 165 million? Let me just look up the number. 155 million to the highest that it's ever been, 687 million a day. So what is going on? Well, Justin can talk about July, and I think July is going to have its own set of problems, but June was a pretty bad month. Alliance Pipeline was down for a little over a week for repairs. They shut that pipeline down to do some repairs in Iowa and Illinois, and ended up down for more than twice as long as anticipated. That pipeline takes gas from the eastern part of the play, the fee portion of Fort Berthold Reservation and Tioga East. That gas goes down that pipeline to Chicago. And so having that down for, I think it was 9 or 10 days, put a huge dent. And so you can see that the Fort Berthold fee gas capture fell to 62%, probably as low as it's ever been. On top of that, the Wild Basin gas plant went down for about 2 weeks, and the Watford City gas plant was down for 1 to 2 weeks for a planned turnaround. And so all of those together with some really bad news for Bowman County, the Kinder Morgan Badlands plant was shut down for good. And so Bowman County is really searching for a solution. right now, it's not a significant volume of gas, but once Cedar Hills gets underway with enhanced oil recovery, we're going to have to find a solution down there to gather that Bowman County gas and get it to market. So all in all, a really bad month for gas capture. There are 13 operators on the list that could potentially face production restrictions, but with all of the things that went wrong, more than likely they're going to have force majeure variances to cover that. So we're still not done analyzing all that. We got to look at all 13, but more than likely they'll have a force majeure for a variance for their June flaring. When we look to July, like I said, Justin's going to talk about that. I don't think the July numbers are going to look great in terms of gas capture. It's not as bad as June as far as what we know, but Little Missouri 4 really didn't get started in July, the gas plant called Little Missouri 4. It's just now coming up, but August should look a lot better. I'm trying to think who, Arrows, Badlands 2 or Bear Den 2 started up. And so they're currently running at about 65 million a day, headed for 100 by year end. Little Missouri 4 is now up to half capacity. So they're running at about 100, headed for 200 at year end. On the downside, Kinder Morgan needs to take their Roosevelt plant down for about a 1 week turnaround. So we're going to gain some and lose some. But July looks like it's going to be another problem month. August should be better, and then we should start to climb out of our gas capture woes in September, October, November, December. All of this gas infrastructure really is dependent on Elk Creek, the natural gas liquids pipeline getting started up in December, but reports to us are that everything is on schedule and that should happen without any problem. So if that happens, we expect to be in compliance at the end of the year. But June, we certainly went the wrong direction. We did some estimating of the amount of production that operators restricted or shut in to try to accommodate all this force majeure activity, and it amounts to about 53,000 barrels a day. So even though we set a record, potentially production could have been 50,000 a day higher. So there was some restraint practiced by the operators, all the operators pretty much, based on knowing that plants, there were some planned shutdowns, and then like I said, the Alliance thing went a week longer than expected. Oasis wasn't expected, but the shutdown of the Bowman County gas plant and the turnaround at Watford City were both planned. So they built that into their production plans. That's really the report for June. So again, to summarize, record production, record number of wells, healthy rig count, healthy completions, a decent oil price. We'd like to see it higher. A lot of uncertainty at this time, but really significant problems in the gas gathering and processing industry, which extended into July, but we think are beginning to correct themselves. We'll take questions.
Yeah. Questions in the room?
What was the reason that the Kinder Morgan shut down the Bowman County plant? Did they give you a reason?
Yeah, they did. The volumes just got too low to make money. So with the declining production in Bowman County between now and when enhanced oil recovery starts up, there just isn't enough volume there. And a large part of the gas that was going to that plant was inert gas from the air injection project that had been going on there. So much of the gas that was going into that plant was actually nitrogen from historical air injection. So there just wasn't enough gas or natural gas liquids to keep the plant operating. We think once Cedar Hills South switches over and starts injecting carbon dioxide. That'll happen sometime next year. That by 2021, we should see enough gas production to revive gas gathering and gas capture down in Bowman County.
I've got a dumb question for you. What's a turnaround?
Thank you. Question from the room was, what's a turnaround? So it's a planned outage to shut equipment down, open it up and inspect it and perform repairs. And so sometimes they do partial shutdowns, but in the case of gas plants, generally they have to shut the whole plant down. So, and yeah, it's lingo for, I guess, a maintenance shutdown.
Got it. And then, okay, you referred to the Watford City gas plant. What
Correct.
gas plant is that? Does Watford City have its own plant?
Yeah, so it's actually Kinder Morgan's gas plant. They call it their Watford City plant. I'm not sure why, because it's way west of Watford City. You know, it's actually closer to Alexander than to Watford City, but they get to name them. So yeah, so it was Kinder Morgan's Watford City plant.
Got it. And then you'd also referenced the Wild Basin gas plant that had shut down. Do you know why that shut down?
I don't have an answer to that. We don't know, hasn't been reported to us why that one went down, but that was a major outage. And if I'm right, Justin, that one lasted close to 2 weeks.
It was mid-June to early July.
Yeah, so maybe a little more than 2 weeks. And no, I don't know why Oasis Wild Basin plant went down, but that was a significant unplanned outage.
Some of the break-even prices that you reported at the
Oh,
end.
I meant to mention those. Thank you. Yes.
Just questions related to that $12 per barrel statewide break-even seems very
Yeah,
low.
that's a pretty amazing number, isn't it? And again, I want to reiterate that number reflects a pure break-even. In other words, just recovering your drilling and completion costs. It doesn't incorporate any return on investment or anything like that. So operators wouldn't necessarily drill wells at these prices, but it gives everybody a relative number. So yes, all of the break-even prices dropped by $1 or $2, except for Burke County. We actually had enough data in Burke County. There's been some drilling activity up there to reflect, an update, a true update in that break-even price. And unfortunately, that break-even price increased to just a little bit above current oil price. So the new drilling in Burke County is kind of on the margin. But thank you. Yeah, we did provide an update there, and just about everything dropped $1 or $2, except for Burke County.
What is the timing for Elk Creek, the Elk Creek line?
So the Elk Creek pipeline is supposed to come on mid-December. And everything looks like it's on schedule for that. So it should be operating at full capacity by January or by Christmas time. Yep.
You had referenced the Alliance pipeline, but that also had shut down. Do you know the reason behind that or what the repairs were that they made?
So the question was about the Alliance pipeline, and I don't know the nature of the repairs. I know that it was a planned outage for repairs in Iowa and Illinois. So it was on the far end of the pipeline where it approaches the Chicago market and the Aux Sable plant down there. I'm not sure what they were trying to repair. What I do know is they planned for the pipeline to be down for 4 days, and it was down 9 or 10. So it really put a significant dent in our gas capture. And everything east of Tioga and most of the fee lands around Newtown and Fort Berthold, all of that gas goes to Alliance. So it put a big dent in our gas capture over there.
Go ahead.
Since we're talking about flaring, one thing I've heard from Senate Majority Leader Rich Wardner and from others is that petrochemicals, if we get a petrochemical plant, that's going to help a lot. Wardner seems to say that he's pretty confident we're going to get something. Dow is one name he's throwing out there.
Mhm.
First off, were you in the trip to Canada?
So the question was about the petchem trip, and the answer is yes, I was along on that trip.
So how confident are you?
So the question from the room is, how confident am I? And I think I'm maybe more on a 50-50 confidence level. I will say this, that there are at least 3 petchem processors in Alberta that have all expressed interest in North Dakota. So it's not a one-off. There isn't a single company that we're pursuing that, you know, it's a make or break. There are actually 3 companies up there. And so that increases the confidence level a great deal. If it was just Dow, who has put us on their list, then I'd be a lot less confident. But I think with 3 companies that all could potentially come here, that, you know, we're at least a 50-50. And Senator Wardner's right. I mean, it's going to be a really useful impact on North Dakota. Over and above flaring reduction, it would be a true value-added, enormous job add industry for the state of North Dakota. So much like what we've seen with the ethanol processing and biodiesel and those kind of things, we'd be adding value right here in the state with the jobs and all of that going on. So, and I think the big impact of it would be that the problems that we see looming in the future for export of natural gas and natural gas liquids would go away. It would be a huge consumer of natural gas and natural gas liquids right here in the state. And it would be exporting value-added product like polyethylene or polypropylene. So,
when you had mentioned that there are jitters in the industry about oil prices right now, what sort of impact do you see that having on production?
yeah, so the question was the price jitters and the impact that might have on production. The impact that it's having is it's making it difficult for the E&P operators to raise capital. So the stock market is not investing capital into the publicly owned companies, and the ones who are looking for private venture capital are finding it hard to interest the venture capital funds in investing in exploration production. The end result of that is fewer rigs, fewer completions, and that means that production growth is going to be slower than it potentially could be. If we had $60 West Texas Intermediate, we'd have pretty robust growth, and we'd be rapidly increasing production. But at these kind of prices, it's hard to raise the capital. It's hard to invest. You probably saw the news line, or maybe not, that Liberty Resources or Liberty Energy Services purchased an entire frac spread, and they're just going to park it for now. They're not going to actually deploy it because the demand for frac services is down, as is the demand for rigs. So we've seen week over week nationwide rig counts drop anywhere from 6 to 8 rigs week to week. And that's a result of capital not flowing to the E&P companies.
I'm just
What that means is
Go ahead.
instead of seeing month-on-month production increases of 10,000 barrels a day, you're going to be looking at more like 2,000 or 3,000 barrels a day month over month, maybe 5,000 in the good months.
I was going to ask, what's a frac spread?
Ah, okay, yeah. So that would be 40 people and a bunch of enormous trucks that pump frac fluids into a well. And so, you know, it generally is a dozen big pump trucks and the supporting sand movers and the frac van and all the people to man that and operate it.
But the same thing as like a frac crew.
Yes.
Yeah, okay.
Yeah, so you have the frac crew, which is the people, and a frac spread is the people and all the equipment that they move around.
But you did mention that Liberty bought this. and
Correct.
Parked it. So there must be some kind of optimism in the back of their minds. Perhaps.
Yeah, so the question is there some optimism in the back of their minds? And I think there certainly is. When you look at the U.S. shale plays, they are still the best place in the world to invest money. But the concern is that production could grow so much faster than the world economy or world demand with the slowdown in China. I think the optimism comes from the hope that we can resolve the trade issues with China and that their goods export will begin to grow again, their manufacturing sector will begin to grow again, and it is hugely dependent on hydrocarbons.
Is there any additional color you can provide to the break-even prices again, just on as they slowly get lower? More efficiency, if that could be accredited to, or other reasons?
Oh yeah, great. Okay, so going back to the break-even prices, the big impact that we saw there was the move to the Generation 4 and 5 completions. So what I saw as I worked through those was that that impact of initial production rates being 30 to 70% higher than they were a year ago. When you see those kind of increased initial production rates and the fact that they're holding up for 18 months or so, then all of that cash flow moves to the early life of the well, and that drives the break-even prices down. So almost everything there was driven not by decreased well costs. We've actually seen the well costs inch up just a little bit. Not like, they're not up 30 to 70%, but with a slight increase in well costs due to these type of frac jobs or the initial completion jobs, and with really enormous increases in well productivity, the break-evens drop $1 or $2 or $3. So yeah, that's the color behind it. It's all about this new generation of fracking technology. And it is some pretty amazing stuff. All of the companies that we've been meeting with report similar results of 30 to 70% increases in initial production rate. I think the other thing that you see in the numbers that I was really happy to see was that gas oil ratio didn't increase for 1 month. New record in oil and a new record in gas, but we didn't see the gas oil ratio go up. And historically, for about a year, gas always increased more than oil. But that part of that is the new completions are making it possible to branch out into some of the area that was considered non-core that has lower gas oil ratios. So that's been helpful. Doesn't show up in the gas capture numbers because of all the force majeure problems, but it will ultimately show up there.
All right. If no other questions for Lynn, I think we'll work to Justin.
Thanks.
No. All set.
Okay, go ahead.
All right. Well, good afternoon, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. We'll get into the update of all things midstream related here in the region. When we look at oil production around the U.S. portion of the Williston Basin, again, you've heard from Lynn, the growth in North Dakota, fairly steady production from our two neighboring states that we share the same transportation network, but we are quickly approaching that 1.5 million barrels per day basin-wide crude oil production that would need to be marketed and moved through the network of pipelines and rail systems that are impacting in North Dakota. We look at the month-over-month changes. You heard just over 30,000 barrels per day for crude oil, almost 60 million cubic feet per day in natural gas production growth. We look at historically how those two numbers compare. Very moderate, fairly expected when we look at what we were anticipating, where the forecasts were leading. So no real big surprises on where production went here for the month of June. We look at crude oil transportation. No major changes, excuse me, when we look at crude leaving the region by pipeline and by rail. We did have some minor changes in the amount of traffic north and south across the border, and then just a slight difference in the amount being refined. When we look historically, one number we want to keep an eye on, and I'll touch on it here in a moment, is that blue dotted line. Excuse me, and that is the Brent WTI spread. Every month I always bring it up at this event because it is an early indicator to us about what we might expect for barrels being marketed out of North Dakota. And so for 20, at least most or all of 2019, that number has been up till now above that $6 to $8 level, closer to 10 for a period of time, which would favor the economics towards use of crude by rail out of North Dakota. If a shipper has the ability to load the rail cars, has a contract in place or a delivery point either on the east or west coast primarily for that barrel, they'll do so. You'll see in a moment. I'll get there in a second. So let's just quickly touch on the overall volumes. Just a slight increase in the expected crude by rail volumes or estimated crude by rail volumes from North Dakota in June, just over 300,000 barrels per day. And then the destination, we did see a little bit of a shift as well, and that I think is price driven. And I'll touch on that here again in a moment, but we did see some additional barrels moving towards the East Coast. And so again, the West Coast, PAD 5 continues to be the dominant destination, but the market share did narrow noticeably from April until May here. So when we look at the pricing, this was from May, so this coincides with the destination market share. You will see the East Coast now did become the highest refiner acquisition pricing point for the U.S. And so again, those barrels being marketed on North Dakota, they'll look at what type of transportation options they have, what the rail rates are, what the refineries are paying at different destination points. And so again, it's no surprise that we saw the East Coast gain a little bit of market share when we see that they were paying some of the highest prices in the U.S. And now getting back to that Brent WTI spread number, that has narrowed substantially here in the last number of weeks. Last month we met, it was around $6 or $7. It's now less than $4. And so we may see some contraction in the amount of crude by rail being marketed out of the region. It's going to depend upon where production goes, if there is some flexibility to get some more barrels onto the pipeline network. But if there's space on the pipelines, the numbers in history would say that we'll likely see more marketing in a traditional sense down towards the Cushing and the Gulf Coast region. It doesn't mean that crude by rail will by any means be eliminated, but we just may see some slight shifting in the way that the numbers shake out here in the coming months. Again, as that spread narrows, that economic incentive to some of those coastal areas, at least historically, has diminished. And then, as I alluded to, just some slight changes again in the amount of truck and rail traffic north and south across the U.S.-Canadian border. Now getting into the natural gas discussion, that breakdown of gas flaring. So this is non-confidential, so the numbers are just a percentage off from Lynn's official statewide numbers. We did see growth in both areas of gas flaring from wells that are unconnected as well as flaring from connected facilities. And I'll touch on both of those and what may be happening here in the month of June. When we look at, again, that historic trend, that percent of flaring from wells that are connected to pipeline systems, I would have to go back 5 years in order to see a similar type of percentage number. And so that was definitely an abnormality. That can be directly attributed to those three major systems that were down for those periods of time in the month of June. And so when those wells traditionally, they are connected to that system and they would market their gas through that system. And so when there's an outage, that gets reflected in that basket of gas flaring. The percentage of flaring from wells that were not connected, if we look on slide 13, we did see a jump in new wells producing gas, and we did not see this correlating jump in new wells selling gas. And so, each month when I show this graphic, we always want to see those numbers exactly together. It would be a perfect world, or even more wells selling gas than new wells producing. But for the month of June, we did see the new wells producing gas outpace the gas connections. And so that led to that increase in flaring from unconnected wells. And then from a gas processing standpoint, Lynn had mentioned a couple of the near-term projects, LM4, the Crestwood facility. Here, by the end of this year, throughout 2020, we are going to see some substantial new processing capacity come online here in the region. We will see some definite shifts in the amount of gas being captured for the better for the region. When we look long-term, again, still working on those next set of solutions for the next 5, 10, 15 plus years as we move forward. And then just I threw in a quick map just so there's some visual reference for some of those systems that were talked about. The Alliance pipeline, you can see that in blue. You can see the connection through the Tioga Lateral, which goes down to the Tioga area, as well the Aux Sable Prairie Rose pipeline, which also connects from the Robinson Lake and the Palermo gas facility to Alliance. And so those two systems were impacted then by that mainline outage on that system. And then the other gas plants, I won't point them out specifically on this map, but a number of them, the comments about July, there were 3 additional plants that had at least some period of July where they had outage or reduced throughput through those facilities. And so again, I would echo what Lynn said. I don't expect July numbers to look quite as difficult as June did, but there will still likely be an impact seen in the numbers when they are released next month. So with that, I'd be glad to answer any questions.
Questions now?
Right. What is the current status of the North Bakken from WBI?
Yeah, so right now, the project, so the question was about the WBI system to connect north of Lake Sakakawea down to the Northern Border Pipeline. And so I will pull up slide 16 here again for those online. If you look at that purple system, that's the WBI Interstate Gas Transmission System. North of Lake Sakakawea, that pipeline today operates full. Even if someone had a gas plant that they could immediately set and put down in place north of Lake Sakakawea, they would not have an outlet for that gas as the system is operating today. And so it's an incredibly important project for that company as well as the region as a whole, because for additional gas capture and systems to be put into place north of Lake Sakakawea, that pipeline system would allow that needed export capacity to connect north of Lake Sakakawea down to the Northern Border Pipeline. And so it's a very critical part of the gas capture solution going forward, particularly for north of Lake Sakakawea.
What is the timeline for that?
They're targeting 2021 for in-service right now. They're just beginning the regulatory process, which is at the federal level through the Federal Energy Regulatory Commission, or FERC. They did have a couple open houses last week. FERC was involved in that as well here in North Dakota. So that ball is rolling, and so that will continue to proceed for the next year or two.
Justin, I might be a month too early to ask about this still, but any insight into the impact of the fire at the refinery in Philadelphia on oil by rail?
Correct, great question. So it was about the Philadelphia, the facility fire. I think we're still maybe a month early. We'll see what the numbers shake out to here. It may even be a couple of months before the EIA has that destination details ready for us. So,
could there be, or is there any impact from the continued delay? Is it line 3 that's going into northern Minnesota?
yeah. So the question was about the Enbridge expansion project that's taking place in northern Minnesota. So that system primarily is a Canadian served or Canadian fed system. But that being said, what happens in Canada, what happens in Alberta does have an impact on North Dakota. So any congestion either on that system backing up production and hampering prices on the Canadian side or in the Midwest as a whole will certainly have an impact on North Dakota. So that project moving forward, allowing that expansion, that flow to move more efficiently and safely through that region would certainly have a benefit to North Dakota.
And I think, if I remember correctly, that line has been delayed a couple times. And apparently they're looking for a reroute. Is that what you're hearing?
I would have to double check a little bit on the exact steps that they're at this point.
Any additional questions for Justin? All right. If not, thanks for joining us. Enjoy August.
Thank you.